This show's brought to you by
Dubai Sovereign Wealth Fund sees a 258% profit surge, and Saudi's PIF to inject billions more into Lucid. You're watching the Daily Brief with Forbes. I'm Ramia Farad. Dubai Sovereign Wealth Fund saw a staggering 257.7% rise in annual profit for 2022 to $9.8 billion, thanks to higher revenue growth. Investment Corporation of Dubai's revenue jumped to $72.8 billion, up 57.8% from 2021. The results were also boosted by the strong performance of its transport, real estate, banking, and financial services segments, and strong earnings from aluminum production. ICD's assets grew 6.9% to $319.9 billion. Its portfolio includes Emirates NBD and Emirates Airline. ADNOC Logistics and Services, the newly listed subsidiary of ADNOC, saw $592.2 million in Q1 revenue, an 89.2% year-on-year rise after completing its IPO. ADNOC LNS gross profit climbed to $165.8 million in Q1, up from only $40.9 million in the year-ago period. It raised $769 million in gross proceeds from offering 19% of the company in its May IPO. The offering was 163 times oversubscribed, with demand reaching $125 billion. Meanwhile, ADNOC has inked over 60 agreements with UAE-based and international companies for the local manufacturing of critical non-oil products at the Make It in the Emirates Forum. The deals will contribute 10% of the $46.9 billion target set by the Abu Dhabi Industrial Strategy. The strategy aims to double the Emirates manufacturing sector. The agreements will also enable industrial investments by suppliers in the UAE worth $774 million and create 21,500 UAE-based jobs by 2031. Dubai has announced a new futuristic master plan for the Palm Jebel Ali. The finish date wasn't shared, but the project is part of the Dubai 2040 Urban Master Plan. It will span an area of 13.4 square kilometers and occupy a space twice the size of the Palm Jumeirah. The project will add 110 kilometers of coastline to Dubai that can accommodate 35,000 families. Palm Jebel Ali will feature over 80 hotels and resorts and will run on 30% green energy. Lucid says it plans to raise about $3 billion through stock offerings, with most of the money coming from Saudi's public investment fund. The announcement sent shares of the embattled EV maker down 9% in after-hours trade. PIF owns more than 60% of Lucid. It's agreed to buy a further 265.7 million shares in a private placement for about $1.8 billion. The rest will be raised from a public offering of common stock. It comes as Lucid struggles with mounting losses and tightening cash reserves. Investors gave a muted welcome to the U.S. House of Representatives passing a bill to suspend the government's borrowing limit and avert default. The market's focus is now turning to the Senate and the interest rate outlook. The Senate must enact the measure and get it to President Biden's desk before the Monday deadline, when the federal government is expected to run out of money. The bill suspends the federal government's borrowing limit until 2025. Boeing says the certification of its 737 MAX 7 is taking a considerable amount of time due to new documentation requirements, but the plane maker still believes it can be certified by the end of the year. Both the MAX 7 and MAX 10 are seen as critical for Boeing to compete with Airbus. Boeing says it's preparing the final documents required by the Federal Aviation Administration as it proceeds through the regulatory process necessary to approve the MAX 7 to enter service. And Elon Musk's jet departed Shanghai today as the tycoon wrapped up his visit to China that saw him express hopes to expand business in the world's largest EV market. Last night, Musk visited Tesla's Shanghai factory and met employees. Earlier in the trip, he also met with China's foreign minister, China's commerce minister, and business leaders. Musk's work in China has raised eyebrows in Washington, with President Biden saying in November his links to foreign countries were worthy of scrutiny. I'm Ramia Farad. This is the Daily Brief. Thanks for watching. Bye for now.
This show's brought to you by